And welcome to my channel, The Buck Stops Here. The purpose of this channel is to show you how to make money and not lose money. So let me tell you a little bit about myself first. I've been a financial advisor for the last 14 years. And before that, I was basically a day trader, swing trader. So I was familiar with risk. And then when I became an advisor, I was kind of a hybrid investor, so I know the fundamentals of risk, and I applied them to financial goals. So that is what I do now. Going forward, what I'm going to do is I'm going to go through the basic presentation a financial advisor would do with a new client. So you get an idea of what it's like and what to expect if you decide to do this, or if you learn from this and you don't need to do it, that's okay too. But we're going to start with the first thing is from the beginning of certain documents, and then the next video is going to be actually setting up the specific accounts and the specific investments that will best realize the financial goals that you're looking for. So the first documents you need would be a will or a trust. So what these do is, after you accumulated some wealth and something happens, this makes sure that the right people get the right assets. And if you die intestate, it goes to the courts, and it's an absolute mess. So you just don't want to do that. Number two is durable power of attorney. You want to have that in case something happens to you financially, your health, and financially somebody can step in and look after your interests. And you should have that when you open the account and say, look, I've got a POA, and put it in my file. Then the third thing you should have is a medical POA. And a medical POA, or power of attorney, gives somebody else the right to come in and take care of you if you're unconscious or something like that. For example, if you had a child living at home and they were 19 years old, they had the same address, same everything, and they were, say, in a car accident, you go to the hospital and say, and your son's or daughter's unconscious in the ER, how's my child? And they can't tell you because of the HIPAA laws. So likewise, if they're going to school in another state and something happens and you call, they cannot tell you, and you're just basically shut out of the process. So if your child or somebody that your loved one goes out of state, you should get a medical POA in that state, or you should have wherever the child or the loved one is, you should have a POA for that state. The next thing is insurance. This is for basically younger people. You both have jobs. You maybe have a couple of kids. You got house payments, you got car payments, but you're doing pretty well putting some money aside. You should have insurance on both spouses in case something happens to one. And then that would not leave them, in a serious financial crisis. So you can get insurance cheap through work. If they offer it, it's like very cheap. And if they don't offer it at work, you can get insurance, like term insurance, online that is reasonable. But that is something that you should probably do. Then last is we do a risk analysis. And the risk analysis gives you and me, of course I'm not your advisor, but it would give you an idea, how do you look at this stuff? How do you want to invest, and is it going to make you crazy? So it gives an insight to your tolerance to risk. So, and then lastly is we have the talk. And I have this with every client, and it's about risk tolerance and what we're going to do if the market heads south. So I'm going to go over that now. It's going to be a different I have to show you some graphs and things. So I will be coming back, and then we will go over this, and I'll show you what I mean. This is the chart I show clients, and basically you. This is the arithmetic of losses. So what this shows is your investment loss. If you lose 50%, you have to make 100% to get back just where you were. So it's not a dollar for dollar thing. If you lose a lot of money, you have to make a lot more to get back where you were. So thinking about this, you have to take a line in the sand where you say, okay, if we're down this much, I want to take some action. It doesn't necessarily mean you have to get completely out of the market, but you're certainly going to lighten the load. I mean, and I had discretion on a lot of client accounts, and this is exactly what I would do. And then I would have some cash, and if when the market turns, and it always does, I would get back in. So, for example, the 2018, 2019 debacle, where at the end of the year, it was down to 20 some odd percent, and it wiped out the entire year's gains. I went to some cash, raised cash, and put a little hedge in. And the hedge basically is the canary in the coal mine. When the hedge keeps making money, that means the market's going down. And the hedge starts losing money, that means it's time to get back in. So it's pretty much tried and true, and it's a good signal. And I have other signals. So then I got back in, and then the market came back, and it was actually some of the best investing we did all year. So these things can be very profitable. But it's a consideration, and if you want to do something like this, you invest in different things than you would normally, like mutual funds or something like that. You get the same results, but you just do different investments that you can risk manage. So that is pretty much the talk, and we will take this up when we start investing for the long term, and I'll show you just exactly what I mean with all that, and I'll give you examples, and you'll see what is going on. But also, I have something else. This is a service that I use, and I'll show you some of the live portfolios that I have. This is Stock Rover. This is a very powerful tool that I've used for years. What you can do is you can set up portfolios, and you can determine the risk, and you can say, okay, I want a portfolio with half the risk of the market, but I want a good return. This is an older one. I date my portfolios, but this one was up a little bit today, but it has a 10% or 11% return yield, and it's got a 0.5% beta, which means you're taking on half the risk. And that is how you actually make this, I want to make money and not lose money, come to life. This is yet another one. This one is 11.92018. It's got a 0.39% beta, which is a little bit lower risk, and it's got a 12% to 12.6% return. And it was up like 0.10. But this is how you can make more money and not lose money, and I'll show you, the actual math and charts and things like that. But this is how you do it. So thank you very much for watching. Hit like if you like it, and subscribe. Next video will be constructing portfolios to a certain risk and risk tolerance, and I'll show you how to manage risk with other avenues like trailing stops and things like that. But all of these will preserve capital and help you make more money. So thank you. Hit the like button and also the subscribe, and I will post day after tomorrow. Thank you very much, and have a good day.